Hey everyone, Mariko Realtor with Bridgewell Real Estate Group here, and I'm back with Jon Chan from RBC again for a continuation of our financing series. I hope you guys are liking all of the financing tips that Jon and I are bringing to you guys. And today's video is very, very relevant to the market, specifically the detached market today, because we're going to be talking about subject-free offers. It's not something that anyone really loves, but it's definitely the reality of the detached market right now specifically. So we do want to walk you through it and just make sure that if you're doing a subject-free offer that you actually know what you're doing. So before we get into it, Jon, why don't you introduce yourself?
Yeah, my name's Jon, mortgage specialist with RBC Royal Bank, here to provide a little bit of advice to get you ready before you go house hunting.
Woo! Okay, so getting right into it because we got a lot of stuff to cover today. I think that just starting off with what is a subject-free offer, for those of you guys that don't know, subject removal is your time in real estate to be able to do your due diligence. So typically the process is you get an accepted offer, then you have standard subjects, which are usually financing, title search, property disclosure statement, inspection, and then strata documents if you're purchasing a strata property like a condo or a townhouse. And that subject removal period is typically about 7 days long. Now, if you're in a subject-free situation, it means that you do not have any of those subjects on the contract. So you're basically saying, I'm not going to be falling back on everything. I'm committing to this deal right now. I'm purchasing the property, no subjects, and I'm going to hand in the deposit, usually either upon accepted offer or within 24 hours of acceptance. So this is a really big deal for a lot of people because you don't really have something to fall back on. Like I said, that subject removal process is there for you to do your due diligence. So it's your time to get an inspection. If you find something in the inspection that doesn't work for you, it gives you the opportunity to back out. Whereas if you're subject free, you have no opportunity to back out. Now, financing is one of the most important subjects, and that's obviously why Jon's here. And so, Jon, can you kind of speak about subject-free offers from a financing perspective and why having that subject to financing is important?
Yeah, absolutely. As you alluded to, the subject removal period is your time to do your homework, due diligence, everything you need to make sure that this is the right situation for you. That, of course, includes looking at all your documents, everything coming together. And we know that we want to make our offer look better than the next to win that offer. And that's why we see more and more subject-free situations. That can work for some individuals if you have at least done your homework prior to getting into such an offer. But there are some people that don't. And that's what we want to try to educate folks out there to really make sure you're ready before you actually even think about doing a subject-free. We talk about, a lot of our clients say, hey, at the very minimum, get a pre-approval. Know what your numbers look like based on your income and your credit. At least remove that out of the equation so we are not scrambling within that, well, frankly, without that subject removal period of time, we don't have time to scramble. But at least knowing that this property might make sense.
Yeah.
But by having no condition, we're really going in as is. So we're hoping that the property, the details, there's no surprises that come up. More often than not, there isn't any surprises, but there could be the odd time, which we'll get into a little later in the conversation, that can potentially derail an offer because there was some unexpected figures that come up, whether it be details about the property or perhaps the value of the property.
Yeah. And I think that, like, you bring up a really good point. It's about doing that due diligence ahead of time. A lot of the times people see subject removal strictly as that time to do your due diligence. And just because you don't have subjects doesn't mean you can't do your due diligence before you write that offer. So like Jon said, getting that pre-approval beforehand, I think involving a mortgage broker when you're interested in writing the property, making sure they run the numbers for like taxes and all these things to make sure that the numbers work out okay. And then we'll get into some appraisal stuff later and how that kind of ties into all this subject-free stuff. But I think that a really like big point to understand with subject-free offers is that, you know, if something goes wrong, like Jon said, say you can't get financing for whatever reason, if you can't complete on that property, first of all, you lose your deposit, which is usually 5% of the purchase price. This is a good chunk of change. And second, you're at risk for being sued for damages, because if the seller is going to buy another property and all of a sudden they can't complete on that property because you didn't complete on their sale, you're on the hook for that. So it's not just about losing your deposit. I think that's a big thing that people miss. So yeah, subject free, that's kind of the nature of it and what it is. It's, not something that we necessarily recommend, but unfortunately in some situations it is the reality of the market. So moving on to kind of how can we help you guys understand subject free offers and how to do them somewhat safely, or at least understand like the logistics of them and how things work on a financing side. We are going to get into appraisals. So can you talk about appraisals a little bit before we get to this example on the board here?
Yeah, we definitely want to, like we said earlier, do as much homework as possible. Certainly pre-approval to get a rough idea what the figures are. But say, for example, we have a buyer that's getting closer and closer to a particular property, thinking about putting a subject-free offer. What I ask as the advisor is, can you at least provide the address and some particulars of that property? Not necessarily what you're offering, but what is it? What may this property be worth? Whether it be BC assessment or recent sales in the area. You being the expert on the real estate side of things, we can try to pull up some comparables to say, hey, this is the fair value of the property. Now, we obviously want to try to put our offer in and around that. We don't want to overpay for anything, which we'll see in a second here. But by kind of preloading that information, we can probably, in fact, take a pre-approval a little further than a simple, hey, you look good at this certain dollar amount. We can say, hey, based on what you've told us so far and possibly this property at said fair value, we could probably make this work. So almost like a pending approval, pending an actual accepted contract. And I get plenty of those where a client had given me the address saying, hey, I'm going to put in an offer of so-and-so dollar amounts for this place. Will the numbers work based on this particular place? Yeah. I can at least do that if they truly feel fit to put in a subject-free offer. We've at least cleared as much as we can and possibly get an inspection or an appraiser in before everything gets finalized, rather than say, hey, it's Mr. Seller, we want 7 days to do this. We'll try to do it beforehand. And it shows that, frankly speaking, our client, they're serious situations. So sometimes that actually stands out even better. By doing that pre-homework, a seller would respect that, hey, this person really wants my place. So maybe I'll look at their contract first.
Yeah, exactly. And when I am speaking to my clients, at least, like, before we even start shopping, we're talking about the pre-approvals, and we've talked in other videos about how important getting that pre-approval is before you start shopping. And then, yeah, usually when we're interested in a property and we're going to write on it, if we know we're in multiples and it's going to be really competitive, it's really like a collaboration between myself and the mortgage broker or the mortgage professional that's dealing with the property, and running those tentative numbers and providing that comparative market analysis, so we can be like, okay, if we're in multiples and it's listed for $1 million, but we think it's going to go for 1.2 because they listed way too low, which is something that's happening quite often right now. Does it still make sense? Can they still do that safely? Now, when we're talking about another step, the pre-approval and the client getting approved in terms of financing is one thing, but then the property also needs to be approved, which is a little bit of the roll of the dice. And that's when the appraisals come in. So having that appraiser come through and appraise the property for what it's worth is going to impact the amount of mortgage money that the client can qualify for. So that's what we are wanting to get into today, kind of when appraisals can get messy, or when appraisals can make a deal essentially fall through, just so that you understand not to necessarily write a subject-free offer blindly. So John and I have put together this example in advance. Situation one is going to be where you have to cough up more down payment, and situation two is going to be where the numbers still work. And we're working with a $1.2 million purchase price. So a couple things I just want to go over in advance. Sorry, I'm just going to adjust this here. So example purchase price is one thing we're going to go through. The down payment that you already are planning for that we've used as an example. We've used a minimum down payment of 20%. Anytime you're over the $1 million mark, you have to put a minimum 20% down. So we've used in example 1 a minimum 20% down payment, and then in example 2 we're using a 35% down payment. Appraisal, so the appraised value, we've put an example together where the appraisal comes in low. So the appraisal is $150,000 less than the agreed upon purchase price in this situation. And then the max mortgage that we're always working with is that 80-20 because of the minimum down payment of 20%. So Jon, can you just speak a little bit to kind of as a precursor for this example, what happens when the appraisal comes in low?
Yeah, absolutely. And that can happen for a number of reasons. Just to see in a pretty hot market, we see a lot of people that try to overbid each other. Frankly, in the bidding wars, it can get a little crazy, and you may end up overpaying for what something is worth. But to remember in the back of your mind, or even just as general knowledge, whenever you're seeking a mortgage, it's not necessarily based on what you paid for, it's what the home is worth. So that's where the appraisal comes into play. Find out how much the home is actually worth based on recent comparables. There are a variety of factors, of course. And to understand that if it does come in lower than what you had offered, well, your maximum mortgage amount, as you will see in a second here, is adjusted down. And well, where's the difference going to come from when it comes to settling the difference? Well, perhaps a larger down payment. So we have those two examples there, or two scenarios in the same example, where the first one is that you only have exactly 20% down, whereas the other one you have a little bit of extra money, a little bit of wiggle room to make that work. Yeah. So I guess the key things to consider is that, first and foremost, try not to get too crazy when it comes to bidding situations. You certainly don't want to pay way more than something is worth. In any case, in any product or service, you never want to overpay. We do understand you want to stand out a little bit, but at the same time, it could significantly impact your ability to borrow to make up settle the whole purchase.
Yeah. Okay, well, let's get into it. So if an appraisal comes in low, so in this situation here, you have a purchase price that you've agreed to for $1.2 million. Minimum down payment on this, so 20% minimum down on 1.2 is $240,000. Now, appraisal comes in at $1,050,000. So that's $150,000 lower than your purchase price. But you purchased subject free, so you got to go through with it. So, Jon, can you walk us through the rest of the situation so they know what to do?
Yeah, and this happens, unfortunately. So we can see that the value is at $1.05 million. Going just as a general rule at the maximum you can borrow when your purchase is over $1 million is 20% down, maximum borrowing, therefore 80%. So 80% of 1.05 million becomes $840,000. It creates a gap there, as you can see, from the purchase price of 1.2 to 840K. And that gap in this case is $360,000. Now, we've already established above there that the down payment that we have working is $240K. So we've effectively have a shortfall of $120,000. If we don't have that cash somewhere to come from, how is this purchase going to settle? Because we can only borrow based on the value of the property. Even though maybe pre-approval wise, everything came together at the higher purchase price, in the real life situation we're looking at, well, it's always based on what the home is worth, not the hypotheticals at that point.
Yeah.
So as we said earlier, pre-approvals is certainly very, very important to do, but it can only take you so far. So there we can see there's some cautionary tales of subject-free offers. Now, if we look at the example of the scenario next door, this is where we could possibly still make the purchase happen, because in this case, we're looking at 35% down. So we intended to say, you know what, I have 420K ready to go for this purchase. Cool, let's go ahead. So we do our due diligence, do the appraisal at this point, and find out, okay, it's only worth 105, and the mortgage we can do is the same, 840K. We work out the same difference being $360,000. That's your down payment to get to the 1.2. Fortunately, in this situation, we had $420,000 ready to go in any case. So we don't have to worry about in this situation where we do have enough to settle. Now we don't have 35% down anymore, but so be it. Subject to qualifying, of course, for the mortgage, this scenario can work because we do have the cash to settle the difference. So in some scenarios, I'd say if you have a substantial amount ready to go for a down payment, that could give you some more flexibility around the subject-free offers, just because we have some backup plans, frankly speaking. If, say, the appraised value comes in a little low, we can make up that difference somewhere. Whereas if you were razor thin, to be honest, I'd tell you, let's maybe pump the brakes a little bit, reconsider some options. If you are truly getting into a subject-free offer, may or may not be the best situation for you. So by doing your homework, and we always say that, do your homework, do your math, and in this case, you can see having more ready to go can certainly help you if you do truly want to go into a subject-free offer.
Yeah, I think you make a lot of really good points. And like, so that you guys know, like, this isn't easy stuff. It's pretty complicated. And so if you have to kind of rewatch the numbers again, that would be totally normal. But really what Jon is getting at is that if the appraisal comes in low, you have to be prepared for that. And the bigger buffer you have in terms of your down payment, the more likely you are to be a bit safer in terms of writing a subject-free offer in terms of financing. If you're in this situation where you're right at the cusp of the minimum down payment and you get screwed in terms of a low appraisal, if you don't have that $120K to make it up, how are you going to complete on the property?
That's right.
They're only going to loan based on that 80% of appraised value. So this is really something that people need to understand. And like Jon said, like, it's not just about, you know, your income being good and you being pre-approved as a person. The property also needs to be approved, and that involves an appraisal. So hopefully this makes sense to you guys. Again, I know it's a lot, so definitely feel free to reach out to us if you have any questions or if you're a little bit confused by it. But in a best case scenario, hopefully we're not going subject free because as you can see in this situation one here, if you were subject free, what are you going to do if you can't come up with that $120K, right? If you had that subject to financing in there, that would be a part of the due diligence, that if you found out that you couldn't complete on this property, that you have the right to back out. You wouldn't lose your deposit. You'd be fully within your rights to back out of that property if you couldn't make up the difference. So it's that safety net, whereas subject free is just no safety net. And that's why sellers like it, because it's a done deal today. But that's also why it's a little bit risky. So with all of that being said, I do kind of want to close off this video to a certain extent, going back to sometimes the unfortunate reality is that to win a property, especially in the detached market right now, it's like almost all we're seeing is subject free. So from a financing perspective, what are your top tips on how to do subject free as safely as possible?
Yeah, we've said it many times so far, pre-approval, pre-approval, pre-approval. Yeah. Get that in place early on. Make sure that whatever you're even looking at is realistic. Maybe you find out that you should be looking at condos instead of townhouses, or any other direction. That certainly does a big chunk of our homework. We looked at your income, looked at your credit, so removing any surprises that we can at least control. As we can see here, though, that there could be still some surprises from the properties in mind. We can't control that, but at the very least, if we look at your own situation first, great, let's do that. The other pieces of advice I can get is, if you are zeroing in on a couple of properties you're really keen on, get me the address. Get us the list of properties that might pique your interest, so we can do a little bit of pre-homework, if you'd like to call it that. It serves multiple purposes. Number one, if we don't have that window of time to actually do the work, by doing it ahead of time before you even make that offer, can avoid some surprises. Maybe you find out that if you're buying into a condo apartment, that there's actually an assessment coming in. But if you didn't have a chance to read those notes prior to, you could be in big trouble the second you buy into the property. Whereas getting these notes from your realtor, getting the reports, all that stuff. Even just like a simple walk around the building itself certainly helps too, just to get a feel of it. And I guess it also, last but not least, shows your true interest to the seller, that if you're willing to do all this pre-homework before even making an offer, I think that says a lot of your particular offer. You're serious. You're likely to actually complete on your deal versus someone that's putting an offer subject free, willy-nilly, may not even work out, whereas you've done as much as you can, control the situation where you can.
Yeah, definitely. And I think that just comes back to, like, just because you don't have a subject removal period does not mean that you don't do your due diligence. We are still doing everything that we possibly can to make sure it's as safe as possible. And kind of further to what Jon said, like making sure that your realtor and your mortgage broker are really actively working together with that property. Your realtor sending those sales and estimating what the actual purchase price should be if you are in a multiple offer scenario, and just communicating to make sure that the numbers and the down payment and everything still works. And from just strictly the real estate side of things, in terms of the other subjects, like reviewing the title search, reviewing the property disclosure statement, if it's strata documents, reviewing those strata documents and asking those questions in advance, like these are things that you should be doing, but more importantly, your realtor should be reviewing, and are not overly time consuming, especially the title search and the property disclosure statement. Like collectively, a lot of the times they're less than 10 pages. Strata documents is another story. That's a couple hundred, but whatever. You got to do what you got to do. And then the inspection is a whole other vlog that we could talk about. But at the very least, making sure that you have warrants on things like the plumbing, electrical, etc., and doing a really good walkthrough, and hopefully even a pre-inspection if you are really wanting to get that inspection done. That's something that I would recommend. So yeah, this is a conversation that could go on forever. There's a lot of things that we could talk about when it comes to subject-free offers, but I think that we covered quite a bit here, and hopefully this whole thing broke down the appraisals and how things work from a financing perspective. So thanks so much, Jon, for helping to walk me and everybody through that. And if you guys have any questions at all, we're your real estate team. So again, Mariko from Bridgeville Real Estate Group, Jon Chan from RBC. We'd love to help you purchase wherever, whatever, condos, townhouses, detached homes in any markets, whether it's subjects or subject free. We're here to support you. And really at the end of the day, we just want to make sure that all of our clients are safe and protected and educated, and also just the real estate community as a whole. So feel free to reach out to us anytime. And thanks again for joining me, Jon.
Thanks for having me.
Okay, have a good one, guys.
Take care.